Hi, I'm David Worrell. Thanks so much for buying my investment and ownership calculator. Today I'm going to show you real quickly how to use it. In fact, we're going to do it twice. The first time I'm going to go really fast. I'm going to follow the instructions, show you how to do the input of just the 5 or 6 cells that you need to fill out to get the answer you need for right now. And then I'll take a break. You ought to know enough to do it yourself, but if you'd like to stick with us, I'll run through a couple of scenarios. We'll probably do 2 scenarios, walking all the way through the first seed stage round, all the way through an A stage round investment, and we'll show you what that looks like and what it does to your capitalization structure. So if you're ready, let's get started. To get started with the investment and ownership calculator, everything you need to know is in dark blue font. So you can follow these instructions, and let's do them one at a time, but you'll be looking down at the table using the dark blue font. So number one, you can start by filling out the initial shares that you already own. If you're the founder or one of the other, on a founding team, you should have already received some shares when you created the company, and you can put those numbers in here. We've got 50,000 shares for each of the original founders. The table also assumes that you've decided to have some employees and to use some employee option pools, and that just means that you've set aside some stock for your eventual employees, and there's a spot for that right down here in row 23. So these are things that you should already know. If you don't know them, look back at your articles of incorporation and find out how many shares were issued and how many each person owns. You can even come over here into column C and put your own name if that makes you feel better. I'm David. Behind the camera is Mark, and we each own 50,000 shares of this company that we're going to look at today. Now, here's the tricky part. We've assumed that you're looking for an angel investor, or maybe your great uncle is going to give you enough money to get the business off the ground. This is the spot where you would put how much money your great uncle or your angel investor is willing to invest. Today, I've assumed $2 million is the investment that we're looking for. The calculator automatically calculates how many shares you're going to give this new investor. We've called him the angel investor. We can go back over here and call him Uncle Bob if you like. But Uncle Bob puts in his $2 million, and presto, the investment ownership calculator says that's 27,500 shares that we've got to contribute to Uncle Bob. Well, that's great, but what's that mean about Bob's ownership of the company? That's in column I, and it's not something that we can calculate. It's actually something you have to negotiate with Uncle Bob. So if your negotiation with Bob says, you give me $2 million, I'll give you 20% of the company, now you know that's 27,500 shares. Let's say your negotiations go really well and Bob says, you know what, I will settle for 10% of the company at $2 million. You change, again, just the blue fonted cells in the circles, and now you see you only give Uncle Bob 12,222 shares. His $2 million investment stayed the same. You input his 10% ownership, and you resulted with 12,222 shares. Now, is that the only thing that this cap table does? No, not really, because you got to look over to the right a little more, and I will show you that even though he bought 10% of the total company, he actually controls 11% today, because we assume you don't have any employees yet, or at least that they have not exercised their possible or potential employee options. We also want to go down a couple of columns to rows 27 and 28, where we see that if we give Bob 12,222 shares for $2 million, that's easy math. We can do the division almost in our head and say that means each share is worth $163.64. Sorry, that calculation is a little messy, but that's exactly the way it'd come out. And you just want to know the dollars per share. There it is. Interestingly, the company you started is now suddenly worth $20 million. How did we do that? Well, Bob bought 10% for $2 million, so 100% is now worth $20 million. That's what we call the post-money valuation, and the calculator calculates that for you automatically in row 28. Again, anything that's in black is calculated for you. Anything in blue is asking for your input. And so by following these very easy instructions, you start by filling in the initial shares. You put in the amount of money invested that the new investor will contribute. And then finally, what percentage the new investor will own. So that's it. It's just that simple. There's 3 basic cells to fill in, and the calculator does the rest. So I'm sorry it took a little longer than I expected, but next we're going to jump into a couple scenarios. So if you're comfortable doing it yourself, have at it. If you'd like to see what this looks like after, say, 2 rounds of investments, we're gonna show you that. So let's jump right into 2 different scenarios of 2 rounds each. Ready? Here we go. So you met David, Mark, and Uncle Bob in the last segment. They own a company called Right Here Interactive, the world's best web page agency. So Uncle Bob bought in at $2 million. He bought 10% of the company, which gave us a post-money valuation of $20 million. And in turn, we wrote Uncle Bob 12,222 shares. He's a pretty happy guy right now. Things are going well. David and Mark are making some great websites. They got some giant customers, and TechCrunch just named them the top web development agency of the year. So what are they going to do? Wow, they really want to grow fast. They're going to go get some venture capital money and start making some iPhone apps. Pretty cool stuff. They convince a VC investor to come in for a total of $6 million is what they're out looking for. They find some VCs, they find some company corporate partners to kick in $6 million. And in turn, the VCs tell them that they want 30% of the business. Well, that's fine. So this our calculator here has spots for both of those things. Let's start with the percentage of the business that the investors want. That's in column L. We have 30% in there. You can change it if negotiations go differently. You can check out some different scenarios. You can say, what if I only give them 10%, or what if I give them 50%? Completely up to you. But we're going to start with 30. I'll come back and do a different scenario in a minute, but there's our 30%. And we've now got a group of investors, 3 different investors investing 3 different amounts of money. We enter the amounts that each is going to invest, and the calculator totals the amount for us, tells us how many shares to issue both totally and to each individual investor. So VC Fund 1 put in $1 million and they get 8,730 shares. VC Fund 2 put in $2 million, they get twice as many shares, and our corporate partner, investor number 3, gets 3 times as many shares. Great. So what's our post-money valuation now? What did that do? Well, look, it actually dropped the share price to $114, but it increased the total value of the company to $20 million. So let's think about this for a second. Is Uncle Bob really very happy? He bought shares for $163.64. His new share price is $114. So Uncle Bob might not be very happy with that situation. He paid $163 for his shares, and after the VC are done, each share is only worth $114. So he might convince you to take a look at some different scenarios. He might say, what if we only give the VC 25% of the company? Now our imputed share price is $147. He's still down a little. If you give them 20% of the company, wow, now his shares are worth $196. So that's pretty good. Bob's feeling good about making money. Even though he hasn't sold his shares yet, he knows they're worth a little bit more. All right, let's take a completely different company. Scenario number 2. Scenario number 2 is not Right Here Interactive. Scenario number 2 is Pets.com. I don't know whether you're old enough to remember Pets.com, but they didn't last very long. They had a couple of founders, and I'm making this up, I don't know the numbers, but they had a couple of founders. Let's give each founder 10,000 shares. Sorry, 10,000. 10,000 for founder Mark. And let's say they expected to have a lot of employees, so they're going to go with 500,000 employee options. Well, that might look like they're giving the company away, but don't forget, during the initial calculations, we're not using employee options to calculate control, so there's still plenty of control. This is called the seed voting, and it's also indicative of the control that you have over the company, unless and until all of those employee options are issued and outstanding. Okay, so Pets.com takes a $2 million investment from Uncle Bob. It's now worth $20 million. But the company starts to go way downhill and has to scramble. And so Uncle Bob comes back in. The Pets.com founders go back to Uncle Bob. I'll put his name here in place of Venture Capital One. And they go to Dad. And they go to Mom. And they say, we just need another $200,000 to right the ship and bail everybody out. We'll never have a giant company, but at least nobody's going to get killed. So Uncle Bob says, that's fine. Here's $100,000 more, and Mom and Dad are each in for $50,000. Wow. All right. What just happened? Oh, and by the way, we gave them 20% of the company. But they didn't like that. They said, hey, this company's out of control. We want 60% of the company. Oh, man. Uncle Bob's original shares went from $34 to just 23 cents. The company's value went from $20 million to just $333,000. So you can see the company is not doing well, and the investors are likewise pushing the value down so that they can own more and more of the company, 60% now. In fact, all in, they own 91%, as we can see in the voting shares column. Column M shows us how much control each person has after both rounds of investment. The original founders, Mark and Dave, now have just 1% each. Uncle Bob's original shares give him 6%, but he was smart. He bought back in at the lower valuation. He has another 46% down here, giving him a total of 52. Mom and Dad each have 22.9 or 23% control over the company. So that's it. There's a lot going on here, but you can see, you can calculate the future of your company, whether it does well or whether it does poorly, based on how much extra money you need and what percentage of the company you'll have to give away to get that extra money. So you might still be way up here. Today you might be just taking initial founders shares, but you'll know that you'll need a little bit of angel investment, and maybe you need a lot of venture capital money. You plug those things in, you decide whether you think you're going to be doing better than you are today or worse than you are today, and the calculator will do the rest to tell you whether people are happy about their share price going up or down, what the total company is worth, and what each person owns in terms of voting rights after each round. Column J is the voting rights after the first seed round, and column M is the voting rights after the second round, or what we call the A round. That's about it. Two very simple scenarios, two very different results, but a very complete picture, a very complete look at your entire business, all on one nice clean page. I wish you much success and hope that you use the calculator for your next big investment, and good luck.